Peter Rose, Longwood Currency Trading. It's pretty much mid-January 2022, getting a little bit past that toward the end. I've had some beautiful days, also some brutal days, brutal cold and lots of snow. In fact, let me turn the camera out and hopefully you can see out into the backyard. Well, you can't see through that part of the window, but get it up there. That's from the other day's storm. Got about 8 inches. You can see, oops. You can see the snow depth chair out there. And the snow, when it reaches the bottom rungs of that chair, sorry for spinning you around, Steven Spielberg, I'm not. But if you get snow beyond the bottom rung of that chair, you got 6 inches, and we're quite a bit beyond that. So we still have 8 inches on the ground. I imagine up here we got 8 or 9 inches, and down in the flatlands valley, they got maybe 5 or 6 lightweights. If you're new to trading, if you're just getting started, I want you to have a good time. Because if you don't have a good time, you're not going to make any money. If you rush into it, you're not going to make any money, and you're not going to have a good time. So the key to the thing is, don't rush into it. You don't want to fill your head with too much information, because then you'll have too many decisions to make. You need to know the plumbing of the Forex market, what I call the what. What's a pip? What's a bid? What's a Fibonacci? What's a trend line? What's all that stuff? 90% of the stuff and the what, you need to know what it is, but you don't need to know anything about how to implement it. There's very few things that you need to know how to do. But the critical thing that you're going to need to learn is when to do the stuff that you understand how to do, if that makes any sense. If I'm going to buy a car, why am I buying the car? I'm buying it to drive somewhere, to get from here to the grocery store. Buy another bottle of good red wine. Yeah. I don't need to know engine combustion theory. I don't need to know tire pressure analysis. I don't need to know much of anything. I need to know that you need to put gas in the car. I need to know how to turn the car on and how to steer it. And then I can learn how to drive it. So I got all of a what. What do you do to get the car to move? You got to turn it on, and you got to step on the gas. Now, how do you apply once you step on the gas? Do you need to apply your information about engine compression theory? No. If I step on the gas hard, I go fast. If I don't step on the gas too hard, I go slow. Oh, there's another thing called a brake. If I want to stop. Just a few things. Well, yeah, but I want to drive to the grocery store. Oh, okay. Well, then you got to know that there's other cars out there, and you got to know some rules of the road. What's the primary rule of the road? Don't get hit. What's the other primary rule? Don't hit anything else. Trading and learning trading, it should be the same thing as learning how to drive, or play a guitar, or design a building. Learn how to design a building, or learn plumbing, build a house. If you frustrate yourself with all the stuff that you can't do, then you won't be able to do the fun stuff, which is trade, make money. The best day of trading is a winning trading day. The second best trading day is a losing one, because you're in the game. It's the game that you want to learn how to play, not just the winning. You have to accept the losing. All of nature is that, they call it in Chinese philosophy the yin and yang, right? I mean, you can't have a piece of paper without having a top side of the paper and a bottom side of the paper. If you didn't have a bottom side of the paper, you wouldn't have a piece of paper. If you didn't have some bad in your life, how would you know that it was good? So you have to have that balance between good and bad, plus and minus, hot and cold. You can't ever have all hot and no cold. You can never have all good and no bad. Correspondingly, you can't have all bad and no good. So when you have a losing trade, what's the good part of that? That you learn something. When you have a winning trade, what's the bad side of that? You don't learn anything. You only learn when you're put under pressure and you lose, because that tells you made the wrong decision. So the question now becomes, the more information that you have, the more decisions that you are faced with. Not that you need to make, but that you're faced with. Again, in the study of mathematics, there's a branch called permutations and combinations. If I have two objects, there's four permutations. Object A and object B. I can have A, and I can have B, or I can have AB, or I can have BA. Four things out of two. If I have three objects, I have 15 permutations, 15 different ways that you can organize those three things. If I have just 5 pieces of information, there are 325 different ways you can organize that information. And yet, all the education that you see out there, so, you know, you got to learn Fibonacci, and you got to learn moving average crossover system, stochastics, RSI, and on and on and on and on it goes. Your screen ends up looking like a chicken shit all over the floor. Limit the how part. Don't worry about how do you do a moving average crossover system, or how do you implement Bollinger Bands. Know that they're out there and they're in the background. At some point, you'll become smart enough to know that there's no difference between moving averages, Bollinger Bands, RSI, because they all deal with past information on averaging. So, do I worry about any of that stuff? No. Have I used any of that stuff? Well, yeah, in the beginning, because I'm an academic. I've got a degree in physics. I've got almost a minor in math. I had a 33-year career as a senior software engineer designing complex internet-based business applications, back-office business application. 40 years in the martial arts, well, 50 years in the martial arts, 40 years in real estate investment. Well, I've done stuff with complex things, and so I thought when I get into the currency market, I got to know all this shit. And you don't. The few things that you do need to know the what of, you need to understand how to do them really, 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 really well. And then you need to understand when to implement those different things. For example, generally speaking, you can have prices that trend and you can have prices that chop within a range. Yeah? So there could be two major different theories and methodologies of trading a trend versus a chop. If you are looking at it that way, you're probably looking at a large time frame. If you're looking at a small time frame, it's all chop comprised of trends. And so you don't need to know how to trade. You don't need two different methodologies. You don't need two different strategies. You simply need to recognize whether you have sustained momentum in a particular direction or whether you have chop. Recognizing that allows you to apply the same rule but at a different time. So you have limited the decision process very, very easily to just to one choice, one or two options, and those two options are when do you apply that rule. The rule, there's no 4 rules that I need. I just need one rule. But when do I apply it? Do I apply it here or do I apply it here? When? So what conditions generate that one part? that's a well, I've got a 400 pages written on 3 books that form a course, and the third one, which is process-oriented trading, deals with that when part. The first work is called Foundations, and that shows you the groundwork and all the what, and it kind of bleeds into and shows you how to apply some of that stuff, the critical stuff, and then it alludes to what's going to happen when you get to the when. The second course, and I'm not pumping my course, but the second one is called Principles, and that deals with the how. It talks a little bit about the what to set the foundation for that, and it does show you how the how bleeds into the when, but the focus is on the how. And then you get to the process-oriented, and that's the when part, but it still goes back to the what and the how. You have to do that. It's called iterative learning. And so I don't say that for you to go, oh, how much is your course and I want to buy it. Don't buy the course. Listen to me on the videos. Do it for free. When you get started in your trading, or if you've already started and you've got 3 or 4 years of experience and it's not going the way that you would like it to go, or you just don't have the time to do it enough to figure out what to do, there's ways that you can fix that. But we gotta step back from the thing and look at it rationally. What are you trying to do? If you had a yard and you were going to cut the grass, you wouldn't just get out there, fire up the lawnmower, and start pushing it or riding it around. I mean, I got a couple acres of land here, so I ride a mower. You wouldn't just start cutting the grass. You'd set a plan out. Do I want to crisscross here? How am I going to get around this tree? What's going to be the most efficient method for me to run this mower? So I don't want to cut this part of the grass over here and then move and cut this part of the grass and then cut it over here. I got to have a plan. What's the plan? And what are the concerns? Well, if I'm on a rider mower, I got to make sure that if there's any really steep inclines and hills, that I don't roll that son of a bitch over. I got one of those here, and I almost did a roll one time, but you get the idea, right? So if you're just getting started in your trading, look at the landscape that's out there. Have a good time now. What are you trying to do? You're trying to make money. You're trying to see if the price has enough basic magic juju sauce in it to get it to move in the direction that you want it to move in for as long as you need it to move to capture some amount of number of pips, right? Well, if you could do something fairly consistently, how many pips do you think that you could get? 3? 23? I mean, I don't know. That's what your desire is. The more pips that you want to gain, the longer the time frame and trading time frame that you're going to have to look at. That just makes sense, right? If you want to trade, let's say you work at a full-time job, you only got an hour to trade a day. Do you want to trade once a day? Which means you're not going to trade for 40 pips. And if you think you're going to do a set and forget, yeah, you're going to come home with a loser more often than you're going to come home with a winner. Well, when you're getting started, you got to know what you're doing before you do that. So if you have an hour to trade and you're down on the 5-minute chart, you have 12 potential decisions in that hour. So if you want to get 5 pips for the day, you sit there for that hour and you wait for those 12 candles to manifest themselves, and somewhere in there you may say, I think this thing could move 10 pips. Boom, and you go in, you get your 5, and you get out. You're done for the day. Go to work. And you say, yeah, but I only got $1,000. I'm trading a mini lot at $1 a pip. I just made $5. Yeah, you did. But if you had a $100,000 account and you made that 5 pips, you're trading 10 lots at $100 a pip. You just made $500. If you can make $300 a day in your trading, you're making more than the average salary. The average salary in 2022 right now, I said this in quite a few of the videos because I think it's relevant as a reference point, is 50 some odd thousand bucks, 53,000. Now if you take off the averaging, I mean if you've got people that are making $4,000 a year, $6,000 a year, and then you got a bunch of people making $500,000 a year, and you average all those out, you get a $51,000 or $53,000 average price. So if you're working a clerk in a convenience store and you're making $15,000 a year, don't shoot yourself because you're not that far off from what most people are making. You really have to look at the median, and you have to look at the reasonable median. You got to chop off a big chunk of the people that are on welfare or whatever, and you got to chop off the lawyers and the doctors and the dentists and all that stuff. And you got to look at the heartland. What are we making? $30,000 maybe. And so, if you were trading a full lot, $10,000 account at $10 a pip, and you were to make 5 pips a day, you'd make how many dollars? You'd make $50 a day. And say you do that 3 days a week. So you're making $150 a week, $300 every 2, so you're making $600 a month. That's just trading on a one lot. So could you see yourself having a $10,000 account? You know, when I work with folks, I generally won't work with somebody unless they have $30,000 or at least understand that where they're trying to get to is at least a $30,000 account, with the idea then to get up and trade a 6-figure account so that they're, you know, making a living doing it or increasing just simply their net worth. I mean, it's a skill like anything else. You can't expect to be a brain surgeon in 6 months. You're not going to be able to manipulate a couple $100,000 FOREX account and make any consistent money without going broke after just 6 months. So let's take your time. So if you're just getting involved in this stuff, you're going to be excited about it, but don't dampen that excitement by trying to bite off more than what you're capable of doing at any given time. So in the beginning, you trade a mini lot. You just try for $3 a day. It's just 0.3%. I mean, even if you did that, I mean, if you're trading at $100, you're making $300 a day on 3 pips on a $100,000 account. So, yes, it does take a lot of money in order to make money. Don't let the heartthrobs tell you that that's not a true statement. It takes money to make money. If you're starting out as buying crappy cars and fixing them up and then selling that and buying another crappy car and fixing it up and then taking the money from those and buying 2 crappy cars, yeah, you can take a small amount of money and you can go forward with that. But you're an expert at how to fix up cars and stuff. I know a guy who did that. In fact, he's a multi-millionaire, sold his business and everything, and then he bought too much property. He wasn't paying attention. He was a great businessman, but he was a shitty property manager, and he got over-leveraged, and when tough times came, he lost everything. He lost his boat, he lost his car, his family left him, everything is gone, boom, broke. He was so broke he had to steal chicken from Kentucky Fried Chicken in order just to eat. And yet, he scraped together, he borrowed a couple of $100. This was many years ago. Borrowed a couple of $100, and he was able to, actually, friends gave him the money because they had faith in him. And he bought a car and he fixed it up and he made $50-$60. He bought another one, he made another $50-$60. He took that money, he bought another better car, he made $400 on that. It took him 10 years, but he went from nothing to millionaire. But he knew what he was doing, but it took him 10 years. So you start small in the currency trading, but you don't do that with the intent of spending 10 years trying to be able to make a living wage. What you're trying to do, and you need to reorient your thinking if you're just getting started or you're trying to reboot your trading career, is you need to learn process. You need to learn trading by principles, not for the money. Trading by principles. Make 3 pips a day. Just get a methodology that you're comfortable with that allows you to make 3 pips a day. And then save your money, sell the truck, whatever it is, and fund a $10,000 account. And then fund a $30,000 account. And once you get to that $30,000 level, now you're kicking off enough money from that, maybe to help augment your living expense, and you're stuffing some money away to make that account grow. And now you can start compounding that money, because you know what you're doing and you compound safely. If you try to compound a mini account, you got to really know what you're doing. A friend of mine does compounding all the time. He starts with $200 and he runs it to $600 or $1,000. He takes a $500 account and runs it to $2,000. And it doesn't take him 10 years to do that. He does it in 3-4 months. Well, that's great. He's been trading for 20 years, and he's a better trader than I am. I mean, I've taken accounts. I took a $5,000 account, doubled it in about 4.5 months. You could do that, but then I ended up losing $8,000 because I was compounding into it, and I was just thinking I was invincible. And it only took 3 trades. Boom, gone. That's not the way to do it. Sit down with a piece of paper and write all this stuff out and develop a trading plan for yourself. You know, most people think a trading plan is, oh, you know, when the short MA crosses the long MA, that's when I'm going to get in, and blah, 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 blah. That's not a trading plan. That has nothing to do with it. A trading plan is, how are you going to conduct your life, your trading life? What are you going to do? When are you going to trade? What's your bank size? What's your target number of pips a day that you'd like to make? And how are you going to go about doing that? That's your trading plan. If you don't have one of those, and if you don't have it written down, nobody's going to be able to help you, because you just don't want to do the work. You just want to think, hey, buy low, sell high. I don't know what to tell you. It's trading is very simple, or you can make it really, really complex, like I did when I started. And that complexity caused me to lose $40,000 on my first really large account. Because I'm listening to all these people out there who I thought knew what they were doing, and not only don't most of them really know what they're doing, they don't understand that they're quoting fucking back patterns and Fibonacci's and all this shit. But they don't even know how to teach. They don't understand that they're not being successful in their trading because of indicators and patterns, but they were successful because they understand the principles of trading. They just don't know how to teach it. And so they teach stupid shit. It's up to you what you want to do. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.